Good morning, traders. It is Monday, February 24th. Taking a look at the charts today, we got some pretty wild price action. Obviously, coronavirus is really ripping across the world and sending quite the wave of fear. And I talked about this in a radio interview about 3 weeks ago that if this continued to expand for another 2 or 3 weeks, we're going to see a huge ripple through the stock market with earnings, production, all kinds of stuff, shipping, you name it, it's going to play catch up. It looks like it's finally here. We're seeing that fear really kick into high gear today. Equities are down. The SP 500 down 2.5%. The Nasdaq was down 3%. If you look over here on the chart, you can see the SP 500 is gapping below futures below the 20-day moving average, picking up speed to the downside. And we have our pink cycle here on the verge of breaking down, which could be the start of something a little bit bigger. Now, keep in mind, we are still in a bull market. There's a ton of fear today. Stocks are going to be oversold. This is usually when we start to see the market put in some type of bottom. And of course, when everybody freaks and panics and we see these big moves, just like we saw over here, you get this huge move. We had another big move over here and a big gap down over here. Typically, when we have these big moves, that's usually almost the bottom. And then the market will trade sideways for some time, just like this. It could trade sideways for a month, could trade sideways for a week and a half. And it's hard to short the equities market in a bull market. You really don't really want to short it. You want to more or less get into the safe havens, because during this time when stocks just trade sideways with huge volatility, bonds will be rising. We should see metals rise, and they are kind of the easier way to take advantage of a sideways or falling market at this point. Once we are in a bear market, which we're still far from, then you want to be shorting stocks because they're going to be falling on average versus trading sideways or higher on average. So taking a look at the markets right now, stocks are set. We're going to have huge panic selling. We could see some weakness for one or two more sessions, some big volatility, but overall we're coming down to some short-term support zones. We are oversold. Our momentum and short-term cycle today are going to be in the lower reversal zone. So we're going to have some pretty wild volatility, I think a lot like over here. We'll see if the market will continue to sell off. We could very easily see some washout tomorrow, meaning we see it continue to go down, potentially have a strong reversal. This is the type of setup that we have going on here. So we'll keep our eyes peeled for that. We are still long SSO with half of our position. We locked some profits on half of it. We started to trim it off up here because we could tell the markets were starting to show signs that something bad was happening. Unfortunately, we're going to have a big gap down, so we're going to take a bit of a loss on the other half of the position. We'll see where the market recovers by the time it opens. I wouldn't be surprised to see if we see this get bought back up today. We do tend to see most of these sell-offs get bought back up, but overall we will be stopped out of our SSO position for a small loss or break even. We'll see how that goes because we did profit on the first half. Now if we take a look over at the other markets, let's take a look over at bonds. Bonds having a nice pop, moving higher today. We're seeing a nice strong move in the safe haven plays. And if we take a look over at gold, up 1.75. It was up over 2% this morning, almost got up to the 1700 mark. So it's really taking off as a safe haven play. And of course, gold miners are doing, they were up over 4% this morning. They're pulling back a bit. You can't see it here, but it was trading up at 146. 55, somewhere up in this area. So it was having a nice big move, but overall it's pulling back a little bit at 146.10. So we're going to have a nice gap up there. We'll see how the market holds. Overall, we have had a nice bounce in the miners, and this is typically what's going to happen. Everybody's panicking out of the stock market, which means the stock market's near a short-term bottom, and everybody's been piling into the gold miners, and we've had this nice pop. And this is going to be this could be an exhaustion pop in the move. We could see price consolidate from this point going forward before it takes off and continues to go higher. So this is a high emotional day. Most people are going to do the opposite of what they should. They're going to bail out of stocks. They're going to buy into metals. And then, of course, the stock market's going to bounce. Miners are pulled back. And they'll be wondering what the heck they did and why do they always get sucked into this type of play. So if you look at these bounces, whenever we get a bounce, something roughly this size, you can see what happens. The market typically pulls back to some extent. So that's where we're at. Expect today to probably be a short-term high, and we could see a consolidation for who knows, a week or a month and a half or 2 months. We just have to play it by ear. But overall, this is an emotional high probably in the miners and a short-term emotional low in stocks. Let's take a look over at silver, up 1% this morning. It's pulling back a bit. It's at this blue resistance line that we drew going way back on the charts. Overall, it pierced through it, closed below it, tagged it again, pierced through it, sold off. It's pushing that level again today. Again, precious metals are trying to firm up. Silver and the large cap miners and silver miners are still not in a full bull market yet. They're still underperforming. Gold and the junior gold miners are actually in new bull markets. But once silver and the silver miners follow suit, I think we'll be off to the races and really start to see the whole sector really take off. But we might be in this consolidation phase for a little while in this sector. Let's take a look over here at natural gas. Natural gas pulling back. This type of pop that we're seeing, let's just go back on the chart a bit. This is the type of pop that we've been looking for where we see the momentum shift. Sometimes we see a pullback. These are the last two times we got into natural gas. Both times they ended up pulling back a little bit, or quite a bit, and then they took off to the upside. And here we've had our first pop. The momentum has shifted. And now we're getting a bit of a pullback here, and hopefully we'll see this start to take off. You can see down here our pink cycle has come across above this dotted green line here, indicating we are now more or less in an upward biased move. This is the first rally with the new upward trend, and this is the first pullback, and typically the first pullbacks can be bought. Hopefully we're going to see panic in the stock market and everybody piles into natural gas and we start to see this take off and move higher. We do have a 220, a 250 upside target here. This could go kind of parabolic and take off. Could be very quick move if we can get that traction. And we've been waiting a long time for this. This is the first time it's finally crossed over to the positive side, and now we're just looking for some follow-through buying after this initial pop here. So that's where we are with natural gas. Crude oil down 3.7%. You can see came up, tagged the 20-day moving average, tested this previous pivot high over here. It's pulling back pretty sharp today, and we'll see where this ends up coming back down. If it finds support down here and bounces, either way, if it starts to break this low here, this could be the sign of a much larger collapse in crude, with 44 being the next downside move from that current price action. Last but not least, take a look at the VIX. This is the daily chart of the VIX. Today, the VIX popping up about 35%, so a pretty good pop. You can see we're into this low 20 area. Typically, when we get to this area, we see the VIX kind of fizzle down. At this point, the VIX is high. It's at the upper end of its average range, and we might see some continued fear in the morning, or tomorrow we might see some washout, depending on how today closes. If today closes near the lows, tomorrow would probably be a gap down, an exhaustion move. The VIX could open up higher and then fizzle back down. That's what has been happening on average, and it could give us a great opportunity. So we'll see how today starts to play out, and try not to get overly emotional, because it's going to probably be near a low in the stock market and near a high for the precious metals sector. And the VIX is telling us there's a ton of fear. And when everyone's scared, that's usually when the bottom starts to get put in for the equities market. But we could very easily see bonds continue to move up for quite a while and start to take the lead, along with gold miners may start to outperform. And I'm going to do an article touching back on this, because I talked about it earlier, mid last year, that we've been waiting for the miners and the metals to start outperforming the stock market. Even though the stock market's been rising, we're seeing the miners and metals keep pace and actually outperform. We're finally at that stage, I think, where We only have a month or two potentially left before a potential bear market kicks in with the equities market, and we'll see how the precious metals do. It could be similar to 2000, 2001. We could see the miners and the metals take off with a bear market in equities, and not look back. Very different than what happened in 2008 when the gold and miners pulled back with the stock market. I don't think that's going to happen this time, but we're going to keep our eyes peeled for some setups or an insight into that as it starts to unfold. Anyways, that's it for this morning. Talk to you in a little bit.